Hi, I'm Ken Frier, Chief Investment Officer of Atlas Capital Advisors. This video is part of a series we call Alternative Investment Reality Check. This series shows that, on average, each category of alternative investments and alternative investing in general has not been helpful for most investors. Here, we'll look at the evidence from the annual NACUBO survey of the investment results of U.S. college and university endowments through the June 2024 fiscal year, which just came out in February 2025. As the NACUBO surveys indicate, the past 20 years have seen a shift in portfolio allocations out of public equity and liquid fixed income and into alternatives. For the median endowment, the allocation to alternatives was just 13% in 2004, and now it's 33%. The shift is ongoing. Ask almost any chief investment officer about their priorities, and adding to and enhancing the alternatives allocation is likely to be high on the list. But as we show here, for most allocators, the work and cost involved in building an alternatives portfolio has not led to better investment outcomes. The median endowment portfolio has a risk profile which is similar to having 70% of assets in a global equity index fund and 30% of assets in a US core fixed income index fund. So let's compare the outcome of the median endowment to the outcome of a simple 70-30 stock bond index portfolio. As the chart shows, the 70-30 portfolio has delivered a slightly higher return than the median endowment over the past 10 and 20 years. There's no evidence here that the shift to more alternative investing is making a noticeable difference for the median endowment fund. What if we used liquid investments as substitutes for alternative investments? For instance, what if the allocation to private equity was shifted to using a US small mid-cap value index levered 1.5 times? What if the allocation to venture capital was replaced by the NASDAQ 100 index, and so on? If we made the substitutions listed on the prior slide, the annual returns shown here would have been even better than the returns of the 70-30 stock bond portfolio, which I showed you earlier. The portfolio which substituted liquid equivalents instead of alternatives would have outperformed the median endowment by more than 1% per year on average over the past 10 and 20 years. This is evidence that investors in alternatives are obtaining lower investment returns than if they made similar investments using liquid assets. This slide quotes a 2009 interview with David Swenson, who for many years was the masterful chief investment officer of the Yale University Endowment Investment Office. He probably has had the most influence on institutional investment practice because of Yale's stellar track record and his writings. As Mr. Swenson says in this interview, the Yale Investment Office achieved exceptional returns not simply because they had a large allocation to alternatives. It was because the organization had the scale and structure to make high quality active management decisions. They were very good at picking managers. He's saying that most investors are in what he calls the middle and lack the skilled staff, the access, budget, resources, and governance to succeed in active management strategies such as alternatives. He predicted mediocre returns for the allocators in the middle who make alternative investments without having the capabilities that Yale had. And as he says, you pay way too much in fees and end up getting subpar returns. So to summarize this video, the David Swenson prediction of 2009 has been accurate. The median investment outcomes of college and university endowments suggest that, on average, the increase in alternatives have not led to better investment outcomes. And as Mr. Swenson suggested, most allocators would be better off if they abandoned alternative investing and instead obtained similar exposures with low-cost passive strategies. And that's what we do at Atlas Capital. We focus on keeping implementation costs as low as possible and on making favorable asset allocation decisions. Thank you for listening. To get other recent market commentary, you may watch the market commentary playlist on this channel, and you may also subscribe to get notified as soon as the latest is posted. You may also visit our website at atlasca.com to have access to our investment philosophy and market views. Thanks.